Hey guys, so welcome to another webinar. And in this webinar, we do the same thing we do every time. We look into the market and carry out analysis. Now, this is not a trading signal. This is not an advice to anybody. This is literally my own primary way of looking at the market and seeing what opportunities might be in alignment with what is happening currently. Now, we use three tools, which is COT report, seasonality, and probability. Commitment of traders, seasonality, and probabilities. That's what we use, right? And we use some price actions, looking at the market and using that to do our technical analysis. Now, if you've never traded before, if you've never literally been into the financial markets before, there's something called technical analysis, there's fundamental analysis, and there's some inside trading going on. So in all of those, you want to align yourself with what makes sense to you. It's not primarily about what you see is happening or what people are making. It's more about how you feel and how you align yourself to how you feel. So let me show you what COT report looks like. Let's go straight into it. We got COT report, and let's just pick an asset. Let's pick. Let's look at CHF. I've already looked into CHF already today, so let's go right here. So CHF on COT report, you have the non-commercials, commercials, and non-reportables. Now, I don't look at non-commercials, neither do I look at non-reportables. As I said, this is my own personal way of looking at the market, not any financial advice to you whatsoever. So I look at commercials, what they're doing. Long means buy, short means sell. Buy means going up, short means going down. And what we tend to do is we look at how much changes have happened over time. So in this case, we look at the changes for the commercials, right? We look at the commercials right here, and we look at the changes that happened. Now, that means that in long, what we can see is as of the 16th, and keep in mind, this is a lagging indicator, by the way, it lags for about a week. And from looking at this, what we see is the changes is they've added 4,747 positions to the market, right? And they've taken away 126 positions from the market. These guys are not necessarily people that make money off speculating in the market like you and I, looking if it's going to go up or down, but they might need to buy steel, or they might need to buy coal, or they might need to buy, gasoline, crude oil, whatever it is they need to buy from another country. Now, when you want to buy it from another country, you don't pay with your own currency, right? So right now I'm back in Nigeria again. I was in London, I think about 3 weeks ago, 4 weeks ago. London, now I'm back in Nigeria. So if I were to buy something in London, for example, I wouldn't take Nigerian Naira to go and buy something in London. And I wouldn't take pounds to come and buy something in Nigeria, right? So in order for me to buy stuff in the UK, I have to change my money from Naira to pounds, right? And that's what this is, commercials. These guys only look to change their money, and they're changing the money at the best currency possible for them, okay? So what we're doing is this. We're looking what they've done in the last week, because some of them they're not buying it right now. They might say, okay, I'm going to leave a pending order for 1 week now, or 3 weeks from now, or 4 weeks, or 5 weeks, or 6 weeks. Now, because a lot of you guys won't want to wait a whole month, or 3 months, or 5 months to find one single trade to go into, or one single asset that you can clamp on, I sort of readapted my strategy to look like this. So every week when there's a new report, we're most likely, from historical patterns, we can tell that when they place this order, it's either immediately or for less than a month, or maybe slightly more than a month. They're not placing it for years in advance. So whatever they're doing now, there's a probability, or there's a chance that price is going to go to that level before there's a change in the seasonality. Now, you guys might not know about the seasonality. Let's go check out the seasonality. So what seasonality looks like, right? It's just a graph. You look at this, we're like, what the heck is this? If you can see as dates all the way from the start, like literally the 1st of January all the way to the last day in December, right here, right? December right here, okay? So what we're doing now is we're looking at the average price movement in the last 5 years, 15 years, 45 years. You can look at it individually, but I tend to align three, just because when you align them, you can see, okay, this is happening for the last 5 years, it's happening for the last 15 years, it's happening for the last 45 years. It's most likely going to repeat at some point. And I want to be at the point that it repeats, right? So CHF, what we know is these guys COT guys, they're buying, they're going long, right? So let's do a quick one. We're gonna put right here. I don't know if you can see my screen long. Oh yeah. Apologies. COT, right? No, let me just put it, I guess. I'm not using. All right. COT, we'll put long on the CHF, right? Okay. So we got that long on CHF, right? Swiss franc to CHF, right? If you don't know the ticker, it's CHF. Now this is futures. It's not like looking at it in forex pairs or anything. It's literally just futures, right? Now, if you don't know what futures is, independent, like literally just one asset at a time. We're not looking at everything. Now, what we know is today's date is 21st, right? So we go here and we try to trace 21st. Does it align with COT say? COT say they're going to be buying, right? So I'm just going to zoom in a little bit more. So it's telling me from 22nd, the 5 years move up, the 15 years move up, and the 45 years move up. You can see that, right? It's going from there 22nd all the way up, right? We're 21st, 22nd is tomorrow, right? So what we're going to do is this. We go seasonality. Just put a little bit of space in there. It look neat, you know. We go long. All right, we go CHF. Then we go. The long starts from 22nd and it ends in 30th, right? 22nd to 30th, right? So that's what it is. And we know it's that for April, just in case, make a little bit of calculation, right? So we have April for seasonality is going long. Now we don't know how long this long for COT is going to last. We don't know that. So sometimes the 22nd might be on a Saturday or on a Sunday, right? How do you know which day to go in? So what we do is this. Now, fortunately, it's tomorrow, you know, Monday, right? But we don't ignore this probability, right? Right. All right. So what we do now here is this. We look for all CHF pairs. Let's have CHF on the search. So slightly different from Windows. So, but it's right here. So we look at every CHF pairs in the Forex axis in the asset class. So probability shows you the Forex asset class that you can see, while seasonality shows you as a future, COT shows you as a future, right? Future is independent. Now, if you know that CHF is most likely going to go up, right? If you know that CHF is going to go up, and you know it's going to go up from 22nd, right? You go to probability and you look at 22nd. What's the probability of my asset going up against the JPY on the 22nd? Now it's telling me on that 22nd, based on probability, probability shows the percentages. So you have 69% going down, 31 going up. That's 100%. So every single day right here that you see dates right here is 100%. And it looks like this. April is buy or sell. January, you know, it looks just basic. You know, it's like a normal Excel sheet. Now, what we do is 22nd that it told us to go in on the probability, on the seasonality, right? You see, seasonality is giving us a date, right? But that date might be incorrect. Probability helps us point to the correct dates, right? So what we have now is this. Probability at, let me go to date, 22nd, USD JPY, USD is going to be more powerful than the JPY. But on the 23rd, Jordan, it's going to go down, 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 no, down, down, up, down. Now, from my historical way, I like it to have 3 days in a row, down, 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 because 53% chance, if you're going to the casino, right? If you go to the casino a lot, and you know that you have a 53% chance of winning, that means you need to play 100 times to be sure that you're going to win 53 times, right? So you know at this point your risk is high. If you know that this day I have a 53% chance, the next day I have a 62% chance, and the next day after that I have like a 90% chance, I'll most likely stay here, because if it doesn't go into profit on my first day, on my second day, my third day is going to give me back in profit, at least I break even. Now, if this seasonality is telling you that trade is going to last a long time, that means you just only have to wait for that first 3 days for price to go into your zone. Then you lock your price and break even. Now, a lot of you guys that trade, or a lot of us, because I trade like that too, but I have EAs that trade for me now, which is before I look at the smaller time frame. There was a point that I look at 1 minute time frame when I chase, like when I traded or I speculated binary option, right? 1 minute, that 30-second, that quick hit. We don't want that now. We're big now. We're big boys now, right? We can afford to say 3 days, 4 days, 5 days, 6 in the market. You understand? We can afford to stay a month, 6 months. If the mill is very big, you can stay a year. That's how big boys make money. And we don't want to trade short term, right? But let's put that aside. For everybody here now that want to just make a quick buck, and you just want to align yourself a more accurate way, keep in mind, it's not a trading signal. It's not, my financial advice to you, just my own speculation. I found this works a lot better. You're more in control here. Now you have on the 23rd, that option. And then that goes back up and then goes down and then goes down, down. Now, what we know is this. We want 22nd to 30th, right? I can put next to that, that's a high risk trade. It doesn't classify my 3 days that I want it to be. I needed 3 days in a row, right? In April. It doesn't do that 3 days in a row. So what I'm gonna do is I'm gonna classify that as high risk trade, but I can still watch the market and trade that. So high risk, okay, but probability. Probability is just like saying Forex, basically. Let's see, high risk. Entry will be 23rd, right? Till 23rd to, it goes all the way to the end of the month, 30th, right? And that's what we're expecting here. So it's a 30th. The main reason I said 30th, you might not understand, is this, right? If you look at the 22nd, we can't go in because it's more favorable to the buy side. But we have the sell side here, buy, sell, hold it over the weekend, and we have sell, sell. It favors the sell, right? Now that's USD CHF. The main reason I say that is this, CHF is long, which is buy, because if you look at the asset in regards to USD CHF, you can see that if USD comes before CHF, then the inverse has to happen, right? So if you're buying before now, you're selling, right? So that's one way to look at it. And the same thing, if you go to CAD, CHF, same thing, inverse. You look at it from this side, CAD, CHF, you can see it doesn't look good. You let that go, because instead of it going down, there's more probability it's going up. You go GBP, CHF. Yeah, still the same thing, doesn't look good. 80 CHF. What do you look like? Doesn't look good. But we got that first one looking good. Yeah. Right. Yeah, doesn't look good here neither. So take that out. Put it down. Take that out. So what looks good is this. USD CHF. Now, that doesn't mean it's a best trade to take. You can see it's a high risk, right? So what we do is you let that out of the window and then you go to the next asset. So in this situation, it should look like Euro, for example. You see that Euro aligns for the long as well, and it goes the same. And then the same process repeats itself. You go to, seasonality, you click on Euro, and you check that, see how that aligns. So, guys, you're already used to this. You already know what we do every week. So what's going to happen is we're going to leave you guys with that. If you have the membership, go online, go get the membership if you don't have it. The link is in the description. You don't have to look too much. It's in the description right there. Just look down. Don't get lazy with it. I don't need to call it out. But if you need to go there, it's right here at the top, business.dameempire.co.uk. Just at the top right here. You can see it right there. Right. Go there, go to pricing, get your indicator right there. and then you can have access to this. Utilize this to make your trade better. And it's not only that. You go other asset classes that you can look into. I tend to look at forex for a long time, but I still look at other asset classes that I don't show here. I don't show everything I do to you guys, and there's still more asset classes in the background that's not being uploaded here yet. So if you need a tool and need to align yourself a little bit better with the market, stay away from signals and all of that stuff, making sure that you're your own boss. You're the one literally coming up with your own analysis, not someone analyzing for you, being your own independent person. This is a great tool to use, right? So thank you very much, guys, for attending, and I'll catch you in the next one. Stay safe, stay dangerous, and only take the opportunities that are in alignment with your goals. All right. Take care of yourself, guys. Peace out.